Larry, you were making the case for the financials as a bullish sector through the end of this year and into 2025. And you laid it out like a story. You laid it out like a narrative. So I love that. And I'd just like to walk through that with you, if you don't mind, and maybe get some pushback from JC. I mean, he's looked at a few charts before. I don't know if you realize that or not, but he's looked at a few charts before. So let's put that first one up. You're saying, 4 reasons to be bullish of the financials. The rotation is real. Here's that first one showing the equal. What is this? This is the equal weighted financials versus the SPY.
Yeah, so this is just equal weight financials. I'm seeing RSPF on my screen here. So equal weight financials, you can see forming a large base, right? It's been a multi-year base that's been building. And what I like to see here is during this build of this base, you've seen a regime change in momentum, the RSI, you can see in the top panel, from this bullish where it's, meddling with the 30s to this bearish regime to this bullish regime where when it did pull back recently this year, RSI stayed above 50. To me, that's indicative of this has the energy to excel into the future and to actually break out here, right? This is a longer term chart we're looking at here. It's a 5-year chart. So yes, as mentioned already, there might be volatility in the short term for this kind of play, but I think in the context of the bull market that I believe we are in the context of this secular push for some easing, I think that equal weight financials looks pretty good. And then I see we just pulled up this RSP versus SPY chart here year to date. Here, quick thing I wanted to run through was from a top-down perspective, I use looking at a bottoming process. We kind of talked about the reversal in semiconductors. Looking at a bottoming process, it takes time. As we've mentioned, trends tend to stay in place longer than we anticipate, and that's how people make money being trend followers. What I like to see here is when you look at equal weight versus cap weight here, you can see we had initiation back in July, right? And then we had a pullback, which is step 2, right? Like I mentioned on Twitter the other day, I don't like to buy stocks when they get punched. I like to buy them once they get up from the punch. And what you saw here is when it got up from the punch, it re-accelerated and momentum stayed in the bullish regime. And so I think this is a tendency, like we said, you've heard about concentration risk in the market. And I think what we're seeing here is diversification playing a role. And when you look at equal weight and then you actually dig under the surface, you can see financials as a sector that is kind of leading the forefront here. Financials on a year-to-date basis is the best performing sector on an absolute basis and an equally weight basis, I believe. Yeah, so that's what I like to see here on a 1-year basis, right? And then year-to-date, they're the second, and then 6 months, they're the third. So they've been a top 3 sectors on multi-time frames for a long period now. So that's why I like kind of this financials push. I know another thing we'll talk about here from a financial perspective is looking at the spreads and yields and kind of how that's a fundamental piece of the information for the financial story. So here you're looking at financials versus the S&P 500. And then on the bottom panel, you're looking at the yield curve. And when the yield curve begins to steepen, I'll put on my CPA hat here a little bit. I used to audit financial companies.
So you're doing integrative analysis right here, basically. You're looking at technicals, and now you're adding some other elements here, macro elements.
Exactly. And one of the reasons I'll do this, just taking a step back, is when you talk with financial advisors and you talk with people that manage money, a lot of times they're looking at charts, they're using charts. But for their clients, they need some type of story, some type of information that they understand, whether they're, in the financial industry or they're just a banker that's not looking at the charts and doesn't understand risk management and stuff. But they understand, okay, I understand when the 10s minus the 2s is steepening, that is a better position for banks because net interest margin, those loans they are making, they're actually able to make money on those loans. And so that's just a macro tailwind for this sector. And when you have those type of things, like you have the rotation for financial advisors, that's a blessing because they can't be super overweight tech 24/7 because they have mandates. And so when they can see something like this, the 10s minus 2 steepening, and they can see that financials are leading, I just think that gives it extra information, weight of the evidence type information to where this sector could continue to outperform the market over the 6 to 12 months.
On financials as a vertical, we've talked about technology and AI, against putting my secular technology hat on. 25 years ago when the internet came along, I spent probably over half my time figuring out how internet was going to impact the various major industries in the S&P. So education, healthcare, industrials, manufacturing, consumer, obviously financials. I'm doing the same exercise with AI today. And today, financials as a vertical, it's a huge vertical, it has probably the more immediate impact from AI over the next, call it 3+ years, than any of the other verticals. It doesn't mean that it's not going to have a huge impact in education, in healthcare, in industrials, in manufacturing, consumer, robots, etc. We've talked about it. But in financials, because there's so much data, which is a critical piece of AI, both broadly available and particular to companies, to individuals, investing, making money, etc., the data as a fuel for AI is so massive and so applicable that AI is going to have much quicker dividends and applications in the financial sector in the next 2 or 3 years. And I just wanted to highlight that as we look at the sector from an investment point of view over the near term, thinking about the long term. Since we're talking about Apple, I'll just mention Apple literally just a decade ago introduced this thing called Apple Pay in the US and worldwide. Today, it's almost 30% of all transactions in America. It's accepted at over 70-80% of retail environments. That's one aspect of finance. It's going to have huge implications in investment, machine learning, etc. Robinhood is a very classic example. The very fact that individuals in a massive way have been able to do the GameStop kind of effect because they are aggregated institutions versus 20 years ago in the financial sector, all because of technology, machine learning, deep learning, and what we're calling generative AI, that has yet to have its impact. So I just want to highlight AI has a huge impact on a relative basis on financials before some of the other sectors start to see the impact.